Okay, so we go 1, 2,
There we go.
3, go. All right, so today we have David Dickson with Cornerstone Mortgage. The most amazing thing about David is his attention to detail, service, and actually getting the ball to the finish line. It is a tough deal, no matter how much money you make or money you don't spend. If you want to borrow money, actually borrowing money is just it's a challenge for anybody at any level. So a lot of people that are in the high end, they just don't want to do it. So they just write a check. But for the rest of us, we do get to deal with David, um, and actually make the loan go through. So what we want you to do today is find out during COVID, during this season, what is David doing to make a difference, and what do you need to know if you or your loved ones are looking to borrow money to buy a big property. So, David Dickson, Cornerstone Mortgage, tell us about you and tell us like what's going differently now than it was a few weeks ago and a few months ago.
Right. Absolutely. Walter, thank you. So yes, I do not like cash buyers. So just call Walter if you have cash. So we do the financing end of it. And it's
I'll
not,
take one for the team. If it's cash, I'll just take one for the team and just make it happen.
you're a good guy. Um, so, things tightened up big time after 2008, 2009. And then we've seen in the last couple of years where things have kind of loosened up, just more of a, not to where it was in the Wild West and, 12 years ago when everybody could get a loan, but just a little bit more common sense items we were able to get through without feeling like people had to give their firstborn child or blood work or something along those lines. But then with COVID-19, uh, you know, over 30 million people losing their jobs, um, Fannie, Freddie, and all the different servicing where people have their mortgages, getting a letter saying, "Hey, you don't have to make a payment for 3 months, 6 months, the option for 12 months." So they're getting options for forbearance, which is then allowing them to not have to make a payment for the next 6 months or so. And so, what a lot of people were confused on is that they thinking they don't have to make those payments. And so, what's happened in all this time though is that now these payments can be tacked onto the envelope. So it's a pretty good deal. I mean, not only do you not have to make a payment for 3 months, 6 months, but you get to tack that onto the end. And then there was the concern that lending was dealing with, that if you took advantage of this forbearance on any real estate owned mortgage payment that you have, now you can't go get a home loan. If you wanted to go buy a second home on the beach or an investment property or a primary residence, you wouldn't be able to. If you missed a payment, you'd have to miss not getting a mortgage for a new loan for the next 12 months. So, Walter, that has loosened up as of last week, is that the lenders recognize that the invitations are out there to not make payments, and whether you've lost a job or haven't, if you're servicing, your lender is giving you the option to not make payments. You can miss the payments, but just know when you go to get a home loan, you have to be back on track with your payments and have made 3 payments in a row. Okay. So that's where things have tightened up, loosened up, a lot of things going on with that. Verifying employment is a lot heavier now than it was 2 months ago, where the lender is really going to confirm on the front end that you're not only going to be checked on the front end with your employer, but you're also going to be checked with towards the end too. So it's some different things there.
So give us a case by case or a case study on some people that you know or you've heard of and how this has
Mhm.
affected them or how you've able to change their mind on it.
So I'm sorry, say that again, on how to get people to change their mind on what?
Well, every time you get a notice from the bank, a
Hmm.
payment, hey, they're like, hey, skip this. Or every time you log into online banking, they're like, hey, don't make your payments. In big
Yeah.
red letters, hey, chill, don't make payments. And what
Hmm.
I want to know is what should we tell people, and what?
You can, yeah, you can when you get those invitations, you can still make your payments. So if even some of these lenders are literally not even giving you the option. If you're not given the option, student loans, for example, they're not. They're basically saying, "Hey, you're out 3-4 months. You don't have to make a payment. You didn't ask for it. You don't have to make the payment. But if you chose to do that, you just have to show you're back on track." So it's all good, Walter. If you're not buying a house in the next 3 or 4 months, you can miss your payments, right? You just if you change your mind, So we've got you and I are dealing with people that are pre-approved and they're shopping houses and they haven't found a house yet. Meanwhile, they have a mortgage somewhere and they're getting that same letter you're talking about. That's the buyer that you just want to say, man, just keep making that payment. That's
Yeah,
going to delay you 90 days
yeah, I
if
always
you
want
miss
to
the
be
payment.
ready. I'm always ready to buy the next. I'm not waiting 3 months to buy the next. I mean, I always want to be ready.
You could lose, you'll lose the house. So that is the reality, but it's better than it was 2 weeks ago where you're out a year.
Yeah. So how did that change, and what actually did change? So for people that are just jumping on, what changed?
Fannie Mae, Freddie Mac came out and made the announcement that they get the pass. That they don't have to wait. The lenders can't make the call. Can't say no. You can't. You're showing that you're not making a mortgage payment. Uh, you know, it's hard to think that you're doing something wrong if the lenders are making very clear when you're getting that letter that you're not going to be considered late, that it tacks onto the end of the loan. So, but from the lender's perspective, you're saying you can't make a payment, right? It's for hardship, even though you don't have to prove it. They're doing that for people that are in trouble and that they've lost their job. So from the lender's perspective on the new loan you're getting, they're like, that doesn't look good. You're not making your payments that you have. Why should you get a new mortgage?
Exactly.
So it's just not a good deal for people that are thinking about buying right now.
So forbearance is not forgiveness, and if you
That's
want
right.
to always be ready for that next loan that you want to be
Yep.
applying for.
That's right. That's right.
So what we want to do is go live on Facebook. We'll talk to some Pensacola leaders audience. So there's a lot of realtors on there, a lot of business owners. So
Okay.
tell us about rates. Tell us about the what's coming up this summer. What's been happening for literally the last 2 weeks while everybody's at home? Actually, 2 months while everybody's been at home. Depending on what state you're in and what part of, say, even Escambia County you're in, you've been on lockdown or self-imposed lockdown. So what's going on with rates?
I just spoke with a lender in Pensacola area who has 3 times the amount of loans in process than he typically has. Because I kept wondering why I was getting calls, and it was this guy can't do it, so can you do this loan? And so that's what's going on is everybody's buying a house right now or trying to get pre-approved to buy a house, and so it's a busy market. And so sellers that are, and that's what you're dealing with, Walter, on the listing side is the inventory's low, but buyers they're ready and waiting for houses. So
Yeah.
that's what we're seeing. It's a very busy market. I'm
Well,
not seeing 3 times the level. We're getting a lot of phone calls. We're staying busy. We always stay busy, but it's definitely a hot market. People staying home, like let's buy a house.
yeah.
So it can be problematic for that same buyer who's not making a payment on their mortgage. So that's the big message to get out there.
Well, so what we're telling them is they're going to have to wait 3 months before they can pull the trigger on a new mortgage, or they're going to have to just start making payments now and be ready. Um, but
That's right.
that's just if you're taking the forbearance,
That's
and
right. You
you
don't have to. You don't have to take it.
don't have
You
to
can keep
take the
making those payments.
forbearance. Um, so let's talk about the market. You mentioned the market. So our stats for April are out now. I mean, it's the end of May, so they've been out for a week or two. Um, We're at 82% for last month when everybody was locked down around the country. You couldn't move a military person. We were at 82% closings from the year before. So we were only down 14 to 18% across the market. And that's with everybody shut down. Can't go to a closing. Everything is virtual. We're still doing 82 out of 100 of our best year ever, and our pendings are up, even though our closings were only down, a couple. Our pendings are up, so we're going to make up those transactions over the next few months. So we're very thankful that the market is strong, and we hope that if you're looking or want to look, that we can get that information to you and help you out. But I noticed that the rates are even lower. I know in March they were hitting 2 something and 1 something, and everybody thought the government was going to just give you 0%. But I mean, we're really looking at under 3% right now for super qualified buyers, right?
There's some government loans that we're seeing in the high twos, low threes, conventionals, low to mid threes. These are amazing rates right now.
Okay.
So that's hence the phone calls. A lot of past clients reaching out that are they're like, hey, I've got my 3.5% interest rate. Should I refinance? Because I'm getting a lot of phone calls, and so those buyers probably need to sit. They've already got their great rate. They don't need to do anything. But it's amazing to be able to get rates in the twos. Yes.
How about the buyers that don't necessarily have stellar credit? They have good credit and they pay their bills, but they just don't have that high number that they want to have. But they still have a good job, a decent payment rate, and they want to buy a house and they have a house. So what kind of interest rates are they looking at?
Well, a couple layers there. You've got, since COVID-19 restrictions, it's a little tighter. So it's a little bit more difficult to get a VA loan or an FHA loan or a USDA loan than it was 2 months ago. So a lot of lenders have restricted on how high the debt ratio can be. There's wiggle room. It depends on who that buyer's talking to, and then credit scores too have tightened up. So they really want a solid buyer right now, because there's over 30 million people that are, that have lost their jobs. So they want to make sure that that's not somebody else that's going to lose a job. Obviously, things are looking so much better with all that's happened, and so we want to make sure that that they're qualifying. And so interest rates, they're not going to get the best interest rate. They're going to get somewhere in the threes, high threes. If they have a 640 credit score, 660 credit score, and then they're in a conventional loan, that's always a credit score driven product. So are they going to be able to get approved? Sure, it just depends on what they've got going on.
And I mean, historically, that's still amazing to have, not the perfect credit, mid-range to lower credit, and still get in the 3 something. That's crazy, right?
Yeah.
Okay. All right. Yeah, my job's to sell that, so I'm working on it. All right. So, what else would you tell a buyer or a seller if they're looking at selling or getting everything ready to go?
I get to be on the sideline when a buyer goes out shopping houses, but I get to hear kind of their mindset when they're going in, and so on our end, we're just trying to prep them. Make sure they're prepared for what that payment looks like, how much they need for closing, how long this is going to take, the process, what to be ready for. But when they're saying they're looking for a deal, or they're thinking they're at somewhere that they expect that the market's going to go down 18%. So they're out there, that looking for that house. I mean, I would say, just from what I'm seeing, and I can only speak for right now, or really how it's been for quite a while, is if they see a house and they like it, trust their buyer's agent. Walter can get a market analysis and see that the value's there. If it's there and you like it, probably don't waste too much time, because it's not going to last too long. I don't know what average days on inventory for under 225.
57 days.
How many? till it
57 days
closes.
across the board. 57
Hmm.
days across the board. So them high, low, whatever. Some of the really good stuff is selling in a weeks. So less than 31 days, way less. But
Hmm.
our average is 57 days. So, and our price ranges have not dropped a penny. They're still going up
Sure.
higher than
Hmm.
all the economists said they would. Not much higher. I mean, they're not just skyrocketing, but they're still going up. So we're running out of listings. Builders slowed down a little bit, so your construction on new stuff is a little slower. Certainly
Right.
not stopped, but I mean, if you were waiting for a lot more inventory to hit the market, so you'd have some more to choose from, that's going to be a while. So yeah, the prices are up. The only thing that was down was closings. We were only down a few points on overlap, month after month, and we think we're going to pick up all the lost traction, 60 days later. So this summer, we feel like the we'll have our March and spring market hit June, July, and August instead of early on. So it'll just stretch out the
Hmm.
summer. So it's going to be super
Good.
hot summer.
So, and when you say 57 days, you know, that's what, 2 weeks the house went under contract, and then 30 days, 40 days by the closing. Correct.
Uh,
That's the
we,
entire time, or
we like
just on the
we
market.
like to close them in about 13 to 17 days. Um, but no, that's time on the market, time with marketing. That's just signs up. We're showing it 57 days. It takes another 2 to 6 weeks to close them out.
Okay, so that's interesting.
Those
57 days.
that stat, yeah, that stat is always a lagging stat, 6 to 8 weeks behind. So we'll have 830, 840 pendings right now, but only 300 of those are new, because we're always a couple hundred behind. Even
Gotcha.
though we'll close say 900 houses this month. We might have had a couple of those under contract even before COVID,
Right. Okay.
and we have a
So
lot
it's
of
the whole. It's a broad mix there.
them are on the pending because of COVID, because people have actually had time. They're not working, and everything else is still rolling for them. They just happen to have a few hours to go look for property. And when I say a few
Hmm.
hours, a few days, weeks that they would not have had. So a lot of those pendings are from that. So
Good.
yeah.
Good.
All right. Well, thanks for that. And those are the rates, and everybody needs to contact David if you have a question about forbearance or skipping a few payments because it's prudently you might want to do something else with that money. Definitely check on what that's going to cost you in the end. Freddie Mac, the government loans have kind of changed what they're doing to you because of that. So find out what that is. Call me, DM me or David, walterpierce.com. Have a great day. All right. Thanks, David.
Take care. Bye.
Bye.